not much on the economic data front in South Africa. We know we've been focusing very much on what's been happening in Europe and, of course, the US as well. But it'll be interesting to see what happens on the consumer confidence front. We've got that set to be released. And then also, we've got the retail sales number. Let's delve into retail sales, because when we look at some of the retailers out there, the clothing retailers, the food retailers, they're looking pretty strong at this point in time. Is it going to reflect in the actual number?
Well, we certainly think so. We at least think you're going to see a slight uptick. So from 5.1% previously in April, because remember this retail sales numbers, they're a little bit old, up to about 5.4%. Now, even though that's a slight uptick, it's in the right direction. But of course, consensus is actually looking for a bit of a decline, a bit of a slowdown to 4.9%. Now, why do we expect a pickup? Well, the fundamentals are quite plain at this stage. We still have interest rates on hold. So interest rates are still low. So debt servicing costs still making room in consumer pockets. And then, of course, inflation, although rising, still is low enough to the point where disposable income growth is still there. So fundamentally, consumers can still spend. But if you actually break down that retail sales basket, it's the clothing and footwear component that we're actually expecting to be the bigger contributor to April retail sales.
Promised you I was not doing a lot of shopping in the month of April.
I may have been. But really, if you look at that and you look at what we've been hearing on the ground from those listed clothing retailers, we've seen reports across the board that from the first quarter, strong, robust growth that they saw in clothing sales, we expect this. And they said they saw it into April, strong and steady growth. And then I guess on the other side, we have to always keep a close watch on general dealers. Now, these are your listed food retailers, right? Yeah. And they make up almost 50% of overall retail sales. It makes sense. We all consume a lot of food. But now on that front, although you should still see a positive year-on-year growth rate, aside from the sales data, what we still think you should keep an eye on is the implied inflation rate that's going to come out of the retail sales numbers. Because up to this point, we're all talking about food inflation and how much it could drive up consumer inflation. Now these implied inflation rates, so take your current versus your constant prices, they show that food inflation, although rising, is actually only about 3.1% so far this year.
It's only just breaching that target band when you look at the overall inflation target in the country. And at the beginning of the year, we were talking about food inflation being a very big issue, and then you've also got the fuel component that feeds through into the food inflation number, and it actually is not really showing as a problem right now.
Well, according to the listed food retailers, it's not. They're not seeing the pass-through quite yet in their internal food inflation rates. Now, we all know food prices are rising, and food inflation is set to rise. But let's just keep ourselves a little bit in context of this cycle being quite different from the previous cycle. You know, we all remember that 2008 food price scare. And I think what's quite important is to remember that, yes, prices will rise and they will drive up CPI. But very importantly, the cycle is going to be quite a bit more well-behaved than we saw in the 2008 cycle. So I think if you look at those retail sales numbers, three important things. One, we do think it's going to surprise consensus to the upside, showing a still healthy consumer. But then clothing and footwear, although driving it, you have to keep an eye on those food retailers for the implied inflation rates that you're going to see coming through.
We've also got consumer confidence numbers set to be released for the second quarter of this year. Given that we're starting to see, you know, the retail sales numbers stabilizing, we've also got a lot of worries about fuel. We've got worries, especially in the Gauteng region, with regards to the future toll roads. Is this all going to start hampering the perceptions? Has it already hampered, or do you think it's only going to feed through in the second half?
It seems strange to be looking for a climb in retail sales growth, but then also having an expectation that consumer confidence will drop slightly in the second quarter. But let's keep in mind, if it's positive, it still means the majority of consumers are optimistic. But very importantly, yes, I think more things are starting to hit the consumer's sentiment than in previous quarters. And already in the first quarter, we saw consumers less optimistic than they were last year. Now let's look at what hit in the second quarter. Consumers know what happened when food prices rise and when petrol prices rise. They know to expect that at some point in time, interest rate hikes will occur. Yeah. And we saw in the first quarter already the willingness to spend on durable items, which would be closely linked to credit and therefore closely linked to interest rates, actually declined quite a bit. And we expect this to carry on in the second quarter. I would say the only thing that could be a bit of a surprise is, remember, the municipal elections actually kicked off better than expected, and the actual share of voting power was quite, well, not really surprising, to the point where people are now hoping that service delivery will pick up. Perhaps that does swing consumer confidence just a little bit. But nonetheless, I think consumers, very sensitive to interest rate hikes and are looking for a hiking cycle at some point on the horizon.